Welcome to Books in Sum, your go-to for bite-sized book summaries.
Some people believe that cryptoassets are the wave of the future and that now is the best time to invest in them. These sound bites explain things like the background of Bitcoin and blockchain technology, how to invest, and what to avoid doing. Cryptoassets are a novel form of digital asset that offers exciting possibilities to investors of all skill levels. The value of cryptoassets rises and falls in tandem with market fluctuations because they are valued based on the software that underpins them rather than any underlying physical commodity. Bitcoin, like all cryptoassets, consists of software and a currency, Bitcoin, and so does not belong to a single asset class in the same way that other, non-cryptoasset assets do. Cryptoassets are attractive and valuable to modern investors because they can be placed in several different asset classes. The blockchain technology that cryptoassets use is groundbreaking. Blockchain is a distributed ledger that keeps track of who owns what percentage of a cryptocurrency. Blockchain databases are distributed and constantly updated and operated by the millions of people who are running the relevant software on their computers, unlike the databases used by banks or centralized governments. Blockchains are decentralized, cryptographic, immutable, and ever-expanding. Because of this, they are a fantastic investment option for modern financiers. Bitcoin was the first cryptoasset ever created, and its currency is the most valuable as a result of its pioneering status. Its origins are shrouded in mystery, with Satoshi Nakamoto credited as its purported creator. Bitcoin was released to the public on October 31, 2008, providing a new option to the failing global financial system. Bitcoin, according to documents attributed to Nakamoto, was designed to be decentralized and to operate on mathematical proof. Bitcoin gained popularity and evolved into what it is today in the wake of the global anger and disillusionment that followed the 2008 financial crisis. There are, of course, alternatives to Bitcoin's model. Bitcoin and Ethereum, two of the most popular cryptocurrencies, have each taken their own unique approaches. While Monero and Zcash employ private blockchains, Ethereum uses it to facilitate the distribution of open-source software and its collaborative development. Private blockchains have been adopted by the financial sector to take advantage of the speed and security offered by blockchain technology without compromising customer confidentiality. Like email's near-total replacement of snail mail, the blockchain technology that underpins cryptocurrencies like Bitcoin has the potential to radically alter the financial services industry. Bitcoin is in its infancy as an investment, but the author expects significant price growth in the future. Bitcoin's volatility has decreased as of this writing, making it a more stable investment. The fact that most major retailers won't accept Bitcoins only serves to increase the currency's appeal. The risks of investing in cryptoassets, such as the this time it's different mentality, and the speculation of crowds problem, are highlighted in this text. These threats materialize when neophyte investors enter the market simply because they think others are doing so. The value of an asset isn't what attracts professional speculators, so they start buying it up. As the price of a particular cryptoasset rises due to increased demand from investors, inexperienced investors may feel compelled to follow suit. These amateur speculators risk losing a lot of money if the cryptoasset fails or turns out to be flawed, or if the professional speculators sell all of a sudden. In addition, savvy investors understand the many opportunities that cryptoassets present, both monetarily and otherwise. Consider both correlation and diversification when constructing an investment portfolio. The degree of dissimilarity between an asset and the market as a whole is referred to as its correlation. When the economy improves, stock prices tend to rise while bond prices tend to fall, but these reactions aren't universal. Because of the decentralized nature of cryptoassets, it is much simpler to diversify away from positive correlation and overall risk than it is with traditional financial assets. Since cryptoassets are uncorrelated with traditional markets, their value could rise if investors seek alternatives to the stock market. Cryptocurrencies can be purchased in a number of different ways, but it's important to keep an eye on the market's fluctuating trading pair options. The guidelines for purchasing initial cryptoassets are the most crucial information presented here. You'll need an account at a cryptocurrency exchange like Bitstamp or GDAX if you want to buy crypto. Both Ether and Bitcoin can be purchased with cash or other cryptocurrencies at present. Once you have some cryptocurrency, you can use it to buy any other cryptoasset, but you can't buy most cryptocurrencies with fiat currency. Checking the variety of trading pairs available for a cryptoasset can give you an idea of the currency's strength before you begin trading. Don't just throw money into the market without first learning as much as possible about it. Invest wisely. When you buy a cryptoasset, you have two options for keeping it safe. The first choice, a hot wallet, makes your cryptocurrency easier to access but less secure. The second choice, a cold wallet, provides extra protection for your cryptocurrency in exchange for reduced convenience. Hot storage, which is connected to the internet, and cold storage, which is stored offline, are discussed at length as the two most secure ways to keep a cryptosset's private key. When deciding how to invest in cryptoassets, it is important to weigh the pros and cons of both approaches. The white paper and decentralization benefit of a cryptoasset are also factors to think about. The white paper for a cryptoasset should explain in detail how the asset works and how it solves problems that other cryptoassets have. The advantage of a cryptoasset in terms of decentralization is its utility as a decentralized service, like Swarm City. The goal of this Ethereum-based app is to eliminate the need for intermediary businesses like Airbnb and Uber by facilitating direct payments between users. The community, the developers, and the issuance model are three additional factors that a forward-thinking investor will take into account when purchasing cryptoassets. You can tell if a cryptoasset is reliable if it is used by a reliable community, has the support of capable developers, and uses a transparent issuance model. In addition, the cryptoasset supply shouldn't start out too high, as demand is more likely to remain low if the market is already saturated. Understanding the market and what it means to invest in cryptoassets is essential before making any purchases.
We hope you found this summary helpful in your listening journey. If you're interested in diving deeper into the topic or getting your hands on the whole book, be sure to check the description below where we've included links to the book and other related products that may be useful to you. Don't forget to hit that subscribe button to stay updated on our latest book summaries. And feel free to leave a comment with any suggestions or requests for books you'd like us to cover. Thanks again for tuning in and happy listening.